Ever wonder why some investors' income skyrockets seemingly overnight? Reaching that first $100,000 in your investment portfolio can feel like one of the toughest challenges out there. You're putting in money, watching it grow little by little, but it sometimes feels like progress is slow. Why? Because until you hit six figures, most of that growth comes from your own contributions, not your investments working for you. As billionaire investor Charlie Munger once said, the first $100,000 is a bitch, but you've gotta do it. But here's where things get exciting. Once you cross that $100,000 milestone, your dividend income can start to build on itself. It's like a snowball rolling down a hill. Each new layer of snow helps it grow faster and faster. This is the power of compounding. And it's what turns a $100,000 portfolio into a powerhouse of dividend income. So, let's break down why this number is so powerful and how it transforms your financial future. Chapter 1. Why $100,000 is difficult to reach. Let's be real. Reaching $100,000 in your investment portfolio isn't a walk in the park. Most of us start with small amounts, adding bit by bit from our paychecks. At this stage, it's not dividends or investment growth doing the heavy lifting. It's us putting in every extra dollar we can manage. That's why the journey to $100,000 can feel so slow. Think about it. If you're investing $10,000 a year with a 7% return, it can take around 8 years to hit $100,000. And here's the surprising part. More than 80% of that total comes from your own deposits, not the market gains. This means that early on, you're building that base with sheer persistence. Charlie Munger summed it up best when he said you have to do whatever it takes to reach $100,000. Sacrificing here, cutting costs there. It's about creating that initial push. Once you get there, though, things start to shift. Your dividends begin to add up, your money starts working harder, and each contribution you make pushes the total higher. So yes, reaching $100,000 is tough, but it's the key step that opens the door to true compounding growth. Chapter 2. The turning point at $100,000. Crossing the $100,000 mark isn't just another milestone. It's a game changer for your investments. Think of it like pushing a snowball down a hill. At first, it's tiny and slow moving, but as it rolls, it picks up more snow, gaining momentum and size. This is exactly what happens to your portfolio once you reach six figures. Suddenly, your money starts working for you in a noticeable way. So why is $100,000 the magic number? It's because at this level, the impact of compounding really kicks in. Your dividends now buy more shares, and those shares generate even more dividends. It's a self-feeding loop. Instead of your returns feeling like small, incremental gains, they start to create a powerful compounding effect that grows faster with each passing year. For instance, with a 3% dividend yield, a $100,000 portfolio would generate $3,000 in dividends in just 1 year. When reinvested, those dividends buy more shares, which means even higher payouts next year, and the cycle continues. But there's also a mindset shift that comes with this milestone. When you reach $100,000, you start to see the results of your hard work, making it easier to stay focused and keep investing. The growth no longer feels like a grind. Instead, it feels like the start of something big. So, while $100,000 is tough to reach, it's also the threshold where compounding truly begins to work its magic, building the foundation for financial independence. Chapter 3. Dividend Reinvestment Explained. So let's dive into one of the most powerful tools that kicks in after $100,000, dividend reinvestment. When we talk about dividend reinvestment, we're really talking about turning your dividends into a growth engine. Instead of taking out the dividends as cash, you reinvest them to buy more shares, which means more dividends next time around. And the best part? It's automatic and requires almost no effort on your part. Imagine you've reached $100,000 with a 3% dividend yield. That's $3,000 in dividends the first year. If you reinvest that $3,000 instead of spending it, you're now earning dividends on $103,000 the next year, not just $100,000. Those extra shares from reinvestment start generating their own dividends, creating a compounding effect that builds on itself year after year. To put it into perspective, let's look at the numbers. If you keep reinvesting those dividends at a 3% yield, in just 5 years, your portfolio might grow to around $120,000. And that's without adding any extra cash. The reinvested dividends become a compounding machine, with every dollar reinvested working harder to accelerate your income. Here's what makes it even better. Dividend reinvestment works regardless of market fluctuations. Whether the stock price is up or down, your dividends are continuously buying more shares, capturing both growth and income along the way. Over time, this reinvestment approach can lead to a portfolio that grows exponentially rather than just linearly. And it's this simple process of reinvesting dividends that allows your portfolio to reach new heights. With every dividend reinvested, you're inching closer to financial freedom. So once you reach that first $100,000, think of reinvested dividends as your silent partner, quietly working in the background to build your wealth faster than you might imagine. Chapter 4: How Compounding Accelerates After $100,000. After hitting $100,000, something amazing happens. Compounding starts to speed up, and each additional $100,000 comes faster than the last. In simpler terms, compounding is like a snowball that grows as it rolls downhill, gathering more snow with each turn. For your portfolio, this means that the dividends and returns you're earning on that $100,000 don't just add up. They start multiplying. To put it into perspective, the first $100,000 might take nearly 8 years of steady investing to achieve. But the second $100,000 could take only around 5 years thanks to compounding. And the next $100,000 after that, maybe just 3 years. As the portfolio grows, so does the effect of compounding, making each milestone easier to reach than the last. This snowball effect is what makes reaching $100,000 so pivotal. At this stage, dividends and investment returns begin contributing a larger percentage of your portfolio's growth, while your contributions gradually take a backseat. For example, by the time you reach $500,000, dividends and capital gains can make up more than half of the portfolio's growth each year. That's when your investments start pulling more weight than your own deposits. So, why does each $100,000 get easier to reach? Because compounding isn't a linear process. It's exponential. Each dollar invested at this stage does more work than the previous one, turning your portfolio into a wealth-building machine. This is where the journey to financial independence really picks up speed, powered by the magic of compounding. Chapter 5: Strategies for Growing Dividend Income After $100,000. Once you've crossed that $100,000 line, it's time to make some strategic choices to keep your dividend income growing. First up, dividend ETFs. Dividend-focused exchange-traded funds, or ETFs, are a fantastic choice if you want a hands-off, diversified approach. Funds like Vanguard's High Dividend Yield ETF, or VYM, or Schwab's U.S. Dividend Equity ETF, or SEHD, hold a broad mix of reliable dividend-paying companies, spreading out risk and making dividend income easy to manage. ETFs are a great choice because they require very little work to maintain while offering steady growth. Instead of picking individual stocks, you're investing in a basket of companies, which reduces the chance of any one company's troubles affecting your income. With consistent reinvestment, these ETFs can help grow your portfolio's dividend income significantly over time. If you're willing to put in a bit more research, individual dividend stocks can offer even higher returns. Companies like Johnson & Johnson, McDonald's, and Coca-Cola are known for their steady dividend growth, and investing in these individually can sometimes yield better returns than a broad ETF. Just remember, selecting individual stocks takes more time and carries higher risk. Finally, once your portfolio grows, consider diversifying beyond traditional dividend stocks. Adding real estate investment trusts or REITs, or even international dividend-paying stocks can help balance your portfolio while increasing your dividend streams. At $100,000, you now have the flexibility to diversify in ways that maximize both growth and stability, helping you reach financial independence sooner. Chapter 6: Long-Term Dividend Growth and Financial Independence. After crossing the $100,000 milestone, your portfolio isn't just growing, it's accelerating toward financial independence. At this stage, your dividend income has the potential to turn into a substantial cash flow, especially if you keep reinvesting and allow compounding to work its magic. Imagine a portfolio at $500,000 generating enough dividend income to cover basic living expenses or even fund part of your retirement. This is where dividend investing can really change your lifestyle. What's exciting is how quickly things can go from here. With the compounding effect, each new $100,000 can come faster, pushing you closer to your financial goals. By sticking to a strategy of reinvesting dividends, maintaining a diversified portfolio, and adding funds when possible, your dividend income could eventually outpace your annual contributions. In fact, some investors find that by the time they reach $1 million, their dividend income alone can match a full-time salary. But financial independence isn't just about a large number in your account. It's about the freedom that steady, passive income brings. The journey to $100,000 may be challenging, but once you're there, the dividends have the power to carry you forward, potentially providing the security and flexibility to live life on your terms. Reaching $100,000 in your portfolio isn't just a milestone. It's the beginning of a new chapter in your financial journey. We've seen how this number unlocks the power of compounding, turning your investments into a snowball that grows faster and faster. With each reinvested dividend, you're closer to financial independence. If you're on this journey, keep pushing toward that $100,000. And if you've already crossed it, share your story or any advice in the comments. Let's support each other on the path to financial freedom. Don't forget to like, subscribe, and keep growing your wealth, one dividend at a time.